have a great week. In fact, let's employ hope. Now, I don't say hope because you hope that things get better in a trade that's not working. I say hope looking at being optimistic about your trading and that you know what you're doing instead of operating or employing fear, because fear is when we make most of our emotional decisions, most of our trading mistakes, fear of missing out, fear of risk. So you really have to eliminate that from your psychology and challenge the markets. I teach, like, challenge the market this way. Okay, Mr. Market, I know I'm buying something or selling something. I know where I'm wrong. I know what I'm looking for when I'm right. Go ahead. Take me out. Okay? Not, I hope this one works. Give me a why if you understand the difference between that. Okay? One's out of weakness. One is out of fear. One is out of strength because you have hope and confidence. So that's the end of my lecture. Let me get back to how I prepped everyone for the NFP last Wednesday. I said if we have a hot number, there would be certain currencies that I would buy on the dip. The euro never got to my spot. Maybe it still will, and take out the stops from the last inflation number. This was the Fed, the Fed. It's a weak sister. Prior to the NFP, I said buy the pound at 120, and that was all week, and that's where it went to. My low print is 120.029, so 3 pips above 120. So if you took that, you have a nice profit made. You could take it. It's very possible this was it, and we're on our way. The only thing that makes me hesitate a little bit is that I am looking for risk off. So let's get to what I entitled this live stream about, and it's talking about the VIX here. So I'm known for looking for 3 drive to a top, 3 drive to a bottom formation. I alerted people who watch my stuff or come into TradeGATEHub.com to see my posts that we were on our way for a 3rd drive to a bottom after we took out 21, and we're still developing it. I'm not saying that this gap up we have today, and we still do have a gap up, and this is what the S&P is up sharply, that we can't retest it, make marginal new lows. But as you can see, the divergence on the 4-hour time frame is pretty glaring. So I think we're setting up a 3rd drive to a bottom in the VIX. And what does that mean? It means once the bottom has completed and the VIX turns up, we're going to have a risk off event. So you have to look at the whole board when there's risk off. Basically, everything's gone up together. I've talked about this many times, right? We've had this great rally in the S&Ps. We've had this great rally in gold and silver, even more so. So, asset prices are all expanding together. And then when there's risk off, they all contract together. So we're approaching these levels that Mike and I talked about back at the end of June, right around the solstice, that, we were bottoming out, and talked about the potential of 4,200 being the battle zone between 41 and 4,200, and we're right here going into the CPI. As you can see on some internal time frames with the S&Ps at new highs here, look how we have some pretty glaring divergence. So I'm not saying that we're going to have a crash and this is the end of the rally and we're going to take out the June lows, but I do think that it'd be normal and even healthy for the market to pull back to, say, 39 to 3,800, That would set up the potential for a right shoulder down here. Here's your left, here's your head, and some type of right shoulder. And then that next time over 4,200, it's a 600 point formation. So it would actually take you up to 4,800 on a measured move, but I think we'll at least see 4,350, 4,400. So I welcome a risk off break to be able to buy some of this stuff. I think we'll get a pretty good pop in the VIX. And what's going to be important is how markets perform should this risk off scenario unfold. I'm talking about a 7% correction in the S&Ps, maybe 10. So that's not the end of the world type of scenario. And it's saying lower first, then higher again. We get through 4,300, I think you have to start opening yourself up to new highs. But during this correction, I would think that we would see a pullback. I want to talk about the commodity currencies because this was another one I prepped you for on Wednesday. I said sell Canada at 130. Okay, that's a weekly. We're already having a negative week. So Canada only got up to 29.84, but close enough. So it was sell the rally on a strong NFP in Canada, and it failed. And then check out where Aussie held again after the NFP. Right down here, I gave 68.65 as a number, and pretty good rally in the last couple days. Since Friday's low, this was on a Friday, which sometimes I suspect moves on Fridays, but Aussie's looking pretty good. So if we get a risk off move, normally you would see Aussie come off with it on risk off, and you should see the currencies come off on risk off, and it's going to be a very important test. So we'll see. I'm still leaning to, if we have one more dollar spike, that we're not going to take out the 109 level here. In fact, the dollar is kind of struggling here. I know everyone's saying the bull market is still alive. You have to like it until we take out 105. And that's true. I mean, you could be conservative and just say, let the dollar show its hand under 105 and I'll go with it. But I'm a speculator and I'm going to look for better levels to have the edge. And maybe next time back under 105, it's an add-on to shorts that are put on for I'm looking for a failing rally. I don't think we'll take out even 108 and wrong over the highs. So we'll see what happens again on the CPI. If that happens, I do think there's a shot for the euro to pull back to some of these fib zones. Here you go. So back under 50% to 61.8, under 101, 61.8's par 70. I don't think we're going to go to 78.6 now. And with that happening, maybe you get one more low in euro pound, but euro pound put in a pretty nice week yesterday. Last week, here's the candle, but I still am eyeballing this 83 level. And I think if we get risk off, that the euro will be weaker than the pound. The pound may retest its lows at 120, but I still think that there's a chance that the euro takes out the last few weeks' lows and trades under 101. So, we're not that far away. I mean, 100 pips, 120 pips would do it. Another, now it's about, 150 points in the Dixie. Gold, I wouldn't chase it here, up here, because this is going to be a real good test for the gold. I think we could get a pullback to 1750, but this is threatening trend line breakouts and everything. And you do recall the gold silver ratio 3 drive to a top I showed you guys. So this was really the signal of the turn. And the metals, this gold silver ratio tried to rally, and it's having a real bad day here today. So, I think we're headed much lower in the gold silver ratio. I think this was it. It was actually close to a 50% retrace from that all-time high. Let's look at the telescope here. Okay, so from this big high we had at 128, we almost got to the 50% retracement level. So this looks pretty negative to me, which is bullish metals. So on risk off, I would think that the metals would even be a better buy than like the euro or the pound. And that's why I like the commodity currencies. So we'll see if we could get 1750 or so into the, if we have a little risk off going, there's 1760. We have a lot of, moving average support there, 2 hour. There you go, 1740, 1750 should shake out some latecomers here, kind of like an A, which was $30. And if C is 1.618, that'd be 48 from 1780. Yeah, so that would take you down to about 1750, 1740. That's my spot for the gold. The silver's acting really strong today. Still hasn't penetrated this moving average, but with the gold silver ratio, silver is your preferred long. And I don't know if I would look for too much, because we did have this little ABC. You really had to be sharp Friday. I'm not a big person about initiating new positions on a Friday. There's an expression, don't try and make your week on a Friday, but you could have. So, maybe the right expression is to be there for the good times. You have to be there all the time. As I've been saying, Russell's been outperforming. Look at the Russell, even though the market was down a bit, the Russell was up all day Friday. Here you go on the Dixie's starting to sell off here. So here's the NASDAQ not making a new high yet. And here's the S&P. So those are my ideas. Maybe we get one more pop in the Dixie, but it's acting like it's really running out of juice. So it's going to take a hot number on the CPI, because we need yields to make one more move to the upside. And that would include one more move in the end to the upside above 136 or so. Up to 137.40 would be a sell for me. And we almost got to the WTI target that Mike and I talked about last week, only 85. So we're almost there in the crude. And I just wanted to show you a couple of things that the gold shares look pretty good. Even Newmont's up today, but here's the GDX looking okay. The silver shares look much better. So here's AG. They all gapped up today. And here we go. This is Endeavor putting in a nice base. Maybe if we get some risk off, you got to buy a break in this stuff, if it even gives us one. And even Fortuna, which has been a laggard compared to Endeavor, is challenging its 50-day moving average here. So metals proving themselves. I hope it's not because we're going to have catastrophe in the South China Sea with Taiwan and China. But the market's almost acting like it did pre-Ukraine, where the metals were rallying before the invasion. And remember, back then, most people were saying they didn't think Putin was going to invade. And, that seems to be the same sentiment now. Majority opinion is that, China's not going to invade. And I hope the majority and the optimistic ones are correct about that one. So invite you to join Mike in an hour and 15 minutes. And Mike and I will be on together tomorrow at this time. If we're adding value to what you're trying to accomplish as a trader, give us a like, leave us a comment. We respond to it on YouTube. And also join us here in TradeGATEHub.com, powered by TradeView Markets. Set up a demo and check out their tight competitive spreads. And that's a wrap, everyone. Don't just count your pips, count your blessings. Big picture for me now is dollar is peaking, looking for dollar selling opportunities on a risk-off move in S&Ps. Good hunting the rest of the day, and I'll see you with Mike tomorrow.